Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Wednesday, the 1st of December, 2021. Interesting day. We saw Fed Chair Powell, along with Treasury Secretary Yellen, day two of testimony in the Capitol, and it was before the House Financial Committee. And Ms. Yellen was really drilled about how presidents Build Back Better, I guess is the name of the program. This program changes names. I can't keep up with it. How they're going to pay for it. And because they were talking about how the budget office had gone through the numbers, it doesn't pay for itself. And she had the answer, and you have to decide, did you like it? 80,000 IRS agents are going to be employed, and they're going after you, and you. That's basically what she said. I was floored, but that's apparently the game plan of this administration. And of course, the Republicans were attacking it for many reasons, including we have all this inflation, the Fed's telling you this, we have to do these other plans. That's the question mark. Then the market had to deal with the Omicron, the first case discovered in California. Person came from South Africa, so far mild symptoms. We've heard from Israel that so far the people catching it, symptoms are mild, and most of the people that are getting these, from what I'm reading, I'm not the doctor, not doing it, they've had COVID vaccines, and that's making the cases mild. So thumbs up on all that so far, but it's very early. We don't know what this all means. We do know that it's starting to take over the Delta in how fast in Africa more and more people are getting it than the Delta virus, so that part of it, the contagion part, is stronger than apparently the Delta part. We saw the Fed minutes today, same thing, wage pressure. When asked about the wage pressure today, Fed chair said in front of the financial committee that it's there, but it's not major. I thought that was interesting because we keep hearing that all these numbers going up and what employers have to do, and they don't think it's a major issue just yet. That I was impressed with. We then are hearing things today about the supply chain. If you're watching, I was watching Lester Holt tonight, and they were showing how things are moving in the rail yards, and another station, how the ports are putting in, under the president, new feed programs and so on to move everything out of them very quickly. I applaud all that. If you can get the supply chain issue resolved, you take pricing pressure off the goods. We know that. And then we get to the craziness of the markets, because if you're trying to make heads or tails out of what's going on so far the first 3 days of the week, unless you've been bearish, you've been basically wrong. It's that simple. The markets try to rally in the morning, they give it up in the afternoon. Now, eventually they'll get too cheap, and you know how that works, and the markets will find their footing again. And as I showed in my financial video on the futures, if you look at the S&P, you're coming right back to the 18-week average of closes, which each time it has hit it in the past 2 years, it has bounced away, and from there gone back up and made new highs. I am not telling you that history has to repeat itself. I'm telling you what the pattern is. When we look at Tesla, I have on here still this open for you. And the reason I've got that open, it is a gap. Markets like to fill gaps. Do I know if the market's going to get back down to that? I can't tell you that it will, but I can tell you you now have a pattern of lower highs and lower lows with today's action. Today's high is very important in the market. You settled under the 18-day average, so the bias is also down. A potential target could be the 995 level, the lower Bollinger Band, and momentum is drifting but on the verge of turning down as well. If you got back over today's high, throw that pattern out. Apple, I thought yesterday, would encounter resistance at the upper Bollinger Band. As it turns out today, it closed 53 cents lower. It did get up early in the day, gave that whole thing up, and ended up closing lower on the day. So it lost $6 back. Staying over Bollinger Bands is always difficult. Next, ARK. Kathy Woods stepped in today and bought en masse Twitter. So far, she's getting annihilated on her investments in terms of what people think. The chart tells you how they're doing. You do agree with that. If you don't, you got a problem there. And this market's making new lows. It's not only that, it's embedded. It's still bearish. I don't know how those investments will turn out down the road. She's a longer-term player. You'll find out. XLI, we have lower highs, lower lows, and you're oversold. I think the smart money's out of the market. I think that combination of the 200-day average, the 100 and lower Bollinger Band, this whole area right here is enough for the pros to say, let somebody else have it. I was looking to see if you'd fail in the semiconductor against the upper Bollinger Band. You know, I've said I like this long term. I've given you all the reasons, but a Bollinger Band is a big number to try to get up and over. This was yesterday's action. If you clear the highs of an outside day down, one of my charting rules is you normally then make a run for the closest of a moving average over the market. If there's a major one, you don't have any. Here's the 100, 200, and the 18-week. And if you get over it, then the Bollinger Band's the number. You tell me what the market did today. You know how I learned all these things? Losing. It's funny, but it's true. And then you write them down. You keep a journal, and you go, my God, let me go back and look at that. There's something in there. You don't learn these techniques by winning. Winning, you just think you're walking on water until you're not walking on water. It gets very thin and you go down. CNBC, I've been telling my traders, I think you're going to the lower Bollinger Band again. You did. So I think the pros covered shorts today. Not all of them because you're embedded. And I think they'll be selling the market on rallies. In XHB, the home builders, did you see the mortgage numbers this morning? They weren't all that friendly. And this is still in a bearish trend. You can see that. If you get over today's high, I think you start getting worried about the market again. Then it could be the market's seen it. It's already oversold, but let's assume it has more left in it. 79.16 is still very much a target. In the energy, you keep running the lower Bollinger Band. You hit it, you bounce, you come back to it. The trend has been down. Lower highs, you see that. Lower lows, you see that. Each time you hit the bands, you back away. Why do you want to be in front of this, in front of tomorrow's teleconference meeting where OPEC makes its decision? I think you got to be backing off. That's what I would tell my clients. EEM, the emerging markets. Well, today's action was one of those where, as far as I'm concerned, this leg to the downside ran its course with today's action. As long as it, what? Doesn't embed. Did it embed? Watch this. Day one, where both numbers are under 20. Day two. Day three. You're fully embedded. So this market, until that red line closes over 21, as you stick your head up like that, be careful. I think the pros are waiting and they're still selling into you on that. Let that rule your day. I think the pros are selling into those rallies, looking for that, and I think they'll get out of the position on any close over 21 in that number. In GLD, you're oversold. Clearly, the market's got problems here. It is fighting at the 100-day and the 200-day average. You seem to hit it most days, as you can see, but the path of least resistance still looks lower at 164.12. To get the market, and I think, say, enough on the downside, if only tomorrow you were to take out 169.01, this day's high, my rule would be the closest moving average going back to 170.54, and then you'd have to be looking, are you still going to embed or not? That's where you're at. This is a difficult chart. GDX, I think the pros are covering their shorts on the close today. Again, the first challenge of a Bollinger Band. I know it's hard, but when you get up to them, you generally peter out. When you get down to them, you generally peter out. COPEX, where did you fail? Right where we talked about. You and I talked about when you got down here, I thought the market would rally back. Maybe you can get to the 18-day average. Market's inside the Bollinger Band. This was Monday. This is yesterday. Now, if you get there, look for a failure against that. Why? Because it's the resistance point. You got there, you reached down. Are we trending? We're not. You have a higher high, lower low pattern. It seems to be stuck, though, between Bollinger Bands and that number. Then in TLT, with all these, with the bonds, BND and everything, we keep hearing, okay, the Fed's going to taper, they're going to raise interest rates. You do realize we're at 148, not back to 165 in the 10-year note. What's going on? We're not getting that. The market's telling you it's scared. And the market's fearful about how's the economy doing at this point? What's going to happen? Omicron. There's so many unknowns. So you're back to the upper Bollinger Band. You're overbought. I think the pros take money off each time you hit that. In FXE, I was looking for a rally to the 18-day average, and that's about it. I am not looking for it to suddenly turn bullish. It could if it closes over that number, but it hasn't. So patience, you lost the embedded reading, you should rally to that number and just sort of hang there for a little bit. And hanging there is what I want to tell you, because shield's not going to be out much longer now. I'm ending the Cyber Week special. So if you'd like to take advantage of it, I do it today because you're not going to have it any longer. How do you take advantage? If you move your cursor up to the very top of this, there'll be an icon that appears. Just click on it and that's how you do it. You get a choice in it. If you buy a 1-year subscription to my research, it starts as low as $156. You get the charting course, a $249 value, or the enhanced Bollinger Band course, another $75 value. All for the plans that start as low as that. So 24 videos a month, a lot of packed with information, free special reports as I put them out, and most people will pay $250 a special report. You won't. You're included in all that as well. If you have questions, call my staff. Otherwise, just click right up here and away you go. I'm Ira. You have a good day, and I'll talk to you all tomorrow.